Welcome to Forex Signals Pro. Let me start off by showing you how to get access to the group. Now we go to the website, and once you are on the website, go to Member Zone. Once you're in the Member Zone, just go ahead and select Signals Room. This tab will open. You'll see here, Open Telegram. And once you open Telegram, you'll be loaded into the Forex Signals Pro Signals Room. Here you can see trades are posted. Now, let's just go over some rules for success. Number 1, only risk 1 to 3% of your account size per trade. So if you have a $1,000 account, you're only risking $10 to $30 per trade. If you have a $10,000 account, you're only risking $100 to $300 per trade. By doing this, you keep your losses small, and when you win, you actually make those losses back pretty easily. If you do end up risking more than this per trade, you run a risk of blowing your account. Let's say you risk 10% per trade. 10% per trade, if you lose 10 trades in a row, you lost your entire account. But risking 1%, you can lose 100 trades before you blow your account. Risking 3%, you could lose up to 33, 34 trades before blowing your account size. Risking only 1 to 3% of your account size, that's the way how professionals trade. That's the way I trade, and with this, I've been able to be successful. Number 2, keep your lot sizes consistent. This means if you're entering the trade at a 1 lot, keep your lot sizes at a 1 lot. Don't enter at a 1 lot, and because we won 5 trades, then you go ahead and up your lot size to a 2 lot or a 3 lot. Because, yes, we do have an 87% win rate, but you never know which trade is going to be the loser. So that next trade could be the loser, and you have to approach it like that. If you keep up in your lot size, and let's say you made $1,000 in profit trading a 1 lot, getting 100 pips. Now you go up to a 3 lot, and you just lost 35 pips. Now you lost $1,050, losing all the profits that you've made with that 1 lot, 100 pips, and now losing it to 33 pips, 35 pips in the market. This is why you want to keep your lot sizes consistent. Keeping your lot sizes consistent, as long as we have a positive pip balance at the end of the month, you will always be in profit. Number 3, do not over leverage. As I said before, this is not a get-rich-quick scheme. You're here to make consistent profits, and those profits are going to be based on your account size. So if you only have $1,000 in your account, don't try to make $1,000 a day. Don't try to even make $500 a day. If you want to make $500 a day, then you need about $10,000 in your account to do it safely. Now, you could do it with $1,000, you could do it with $2,000, but you have to know that you're taking a risk, because to make that much on a small account, that means you're over leveraging. So you're using a lot size that's too big for that account. So if you're on a $1,000 account and you go ahead and say, I'm going to use a 1 lot on a $1,000 account, and the market goes down 30 pips, you just lost $300 out of that account. Now you only have $700. You could lose two more trades and blow your account. So why would you do that? Don't do that. Don't over leverage. You have to have a long-term mindset. You won't get rich overnight, but risking only 1 to 3% of your account, gaining 3 to 6 to 9% per trade, you'll definitely make a lot of money in the long run. Number 4, follow all trade instructions. Let's say that we're in Euro USD and we're up 15 pips. You're in a 1 lot trade. I send out an update that says partial out 30% of Euro USD up 15 pips and move your stop loss to your entry. What you're supposed to do is, if you're in that 1 lot, you're up $150. So you would go ahead and partial out 30% of that trade, which would be a 0.3, and that 0.3 times 15 pips would give you $45. So you'd partial out $45, leave that in your balance, put that in your balance, and then you'd leave $105 or a 0.7 running on the market. Now with this, if price pulls back and then price hits the point where we entered the market, we've already made $45, and now we're out of the trade, not risking anything. So the market could turn around and push up 100 pips in the other direction, and we would have still made money. This is how we are able to maintain consistent profits, because we partial out some of our profits move our stop losses to our entries so we're in a risk-free trade as soon as possible. And being in a risk-free trade takes away a lot of stress from trading. Knowing that you've already put money into your account balance and now you're in a trade that you will never lose money no matter what happens on that trade. That's a great feeling. I'll show you how to partial out. Let's say you're in this trade. You would go to close the trade, and then where it says the lot size that you want to close, you would change that. And once you have those profits secured, you'd look to see the price that you entered and change your stop loss to that price. And all I can say is, nobody has ever went broke taking profit. And this brings us to rule number 5. Do not change the rules. Follow the rules and you'll be successful. And you can have this as another stream of income. So now that we've covered the rules of success, you're ready to go. I'll see you in the signals room. Happy trading.